Hello, guys, and welcome back. Ron here once again. Today's March 12th. I just wanted to get through October the 10th from last year. So just wanted to put out part two, episode number 7 of Mastering Execution. Obviously, this day we did $11,001.15 on this $98,000 week. So I just want to go ahead and finish covering October the 10th, the trades that I left off on, to cover how I was able to lock in this 11,000. Obviously, what I'm sharing here, guys, is lessons learned. There's a lot of things that I did back then that I wouldn't necessarily do the same way now, starting with the amount of trades that I took. Obviously, this is was a hot and heavy day, as you can see, and yes, it was a profitable day. It was definitely a profitable day. But had things gone the opposite way, this would have been ugly. I mean, this is way too many positions to manage, and I can tell you from experience, because it's happened. When I have too many positions like this, I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 different stocks that I was looking at. That is a big no-no, guys. Because it just things start going, if things are highly correlated with the markets, and the markets could be going down, the markets could be going up, but when the markets say, hey, you know what, it's time to go back up, and I'm caught down here trying to close out one position, and then I go to the next position, and let's say I didn't get a fill because everything is rallying, everything is going higher. So now I'm not getting fills, so I got to chase it. Because I'm not getting fills, I'm distracted with these smaller ones, right? And then I'm missing out on closing the bigger ones, the Amazons, the BLKs, the BKNGs, and that's what happens, and that's what ends up hurting you, because when the bigger ones move, you're gonna lose a lot more money, and because you were distracted on these little ones, you end up losing more money. So that's just something I wanted to share once again, in case this is your first time watching these videos, or this is your first video. I wanted to make sure you understand that this is not common practice anymore for me. I do not recommend trading more than 4, and preferably no more than 2 stocks at any given time, and even 1, honestly. Just if you can just manage 1 stock, you'll do a lot better, because you're just watching it. Like, you just watch. My favorite 2 obviously are Amazon and BKNG, and you'll see how this week kind of started that trend for me, because these were the guys that made me the biggest bang for my buck, and you'll see how I finish out this week as I start cutting back on some of these positions. But anyway, on this video, we're going to go ahead and cover CGC, BLK, BKNG, and finish out with Amazon, okay? So let's go ahead and get started with those. All right, so for CGC, what do we have here? We initiated the positions on the 8th, and we finished all of them, I believe, 2. We closed them out, so this was a day trade on the same day. I believe I should have covered that already on the other video. And then we initiated end of day trades here, where we initiated a position here at 215 at 1500, and then we added another one at 1525. We started taking profits or adding more here in the morning, and then we sold here. And obviously this was a losing trade. Obviously you can see here we paid 215. We bought this one again here, and this one, and obviously we did not get the return we were looking for. So this was a loser, and it looks like we may have held an extra one for the next day. Actually, no, we didn't hold it. I can tell you right now, these expired worthless. So this was a bad trade. It just didn't work out. This was during the time when TLRY and all the pot stocks were kind of trying to make a rally. So we were trying to take advantage of that and do CGC, which was one of the better ones for me during these times, except for this week. Obviously, it just didn't work out. So if we go back here, let's take a look. So the first one we entered on 10-8 was the 2 at the 50 strike. So that was at 1525. Let's take a look here. So let's just work backwards. So this is the 8th. Again, ignore these dates, guys. It's just when I took the snapshot to take a look. So this is the 50 candle, the 40, 30, the 20 candle. So I entered this position on this candle, as you can see here, and I bought calls. See this? Bought 2 calls, and then I bought 10 calls. Right? Was this a good position? Was this even a good entry? No. Not really. Obviously, we have a reversal pattern here. I mean, there's really no rhyme or reason for entering this position except that we were expecting the stock to rally higher based on what all the other pot stocks were doing. But I can tell you right now, this was a terrible, terrible entry. Yes, I did enter it at the end of the day, expecting a continued move higher the next day. But even if you're doing that, you doesn't mean you should be entering on bad at bad times. At bad timing. It's just poor entry for me to see a pattern like this and then start buying calls here. So obviously, when I'm buying calls, I'm expecting it to go higher. But what did I do? I bought calls on a pattern that clearly says, "Hey, I'm reversing lower into the close," and obviously that didn't work out for me. So I added at 1525 and 1513, which is the candle right before that, obviously, which is the one with the hammer. So that was a bad entry, bad play, and then I went ahead and bought some puts. So now I'm playing both sides. I'm trying to play both sides here. So obviously I didn't close those puts. And let's see, did I do in the money on those ones? At least I bought 50 calls and the 55 calls. So I bought some 50s in the money, and I supplemented with some out of the monies up here, obviously, at the 55s. So like I always say, though, always initiate your position in the money and supplement with at or out of the money. But always initiate in the money, because you will notice that these in the money ones will start making you more money than those out of the money positions for quite a while, until these come in, the ones that are out of the money start to come in the money or at the money, just because of the nature of how options work. So you need to understand that. So always initiate your positions in the money. So when we go to the 10th, obviously I bought some 2.1 puts here. Obviously I didn't close those probably till the next day, or I let them expire. So we'll take a look at that on the 11th or the 12th, if it is on the statement there. So at 9:54, I bought some puts. So 30, 40, 50. So why did I do it on this candle? Obviously, we have a solid break below the pivot, which, like I always say, so we had a break low before the pivot low. I mean, not the pivot, the pre-market low, that's what I would be looking for. Hey, let's make sure we break down below the pre-market low before we enter. But because we're near a pivot, I want to make sure that we break that pivot and not just start, consolidating or bounce higher. So on this candle, now that we have confirmation that we're going lower, I bought a put here. And obviously it only went down for a little bit. It rallied for the day, and then it started to come back down, obviously, for a potential continued sell-off the next day, or for the next 2 days. So we'll see what happened with that. On the other two positions, obviously, on 10-10, I sold these pretty much just to get out of the positions and not just let them expire. So I took back, $60 on this one, on the one I closed at 11:30, and maybe $8 or 40, I don't know, whatever I collected there for two contracts. So I didn't take back much money at all. It was just the point, let's just close these positions because they're obviously not going our way. And I closed those at 11:30 on the 11:30 candle. So 30, 40, 50, 11, 10, 20, 30. So I closed it on this candle here. Okay. So on the bounce, I went ahead and just collected that and just moved on. It's over. I left the puts open to see what happens for the next day. Obviously, let's see. It was a solid position. I did 10 contracts. I did go all in pretty much at 10 right away. I always suggest now, always do a 1, 2, 3, 4 method to scale in and layer into your position, or you can do the 2, 3, 5 if your full position is going to be 10, or a custom variation of that. As long as you just don't go all in, it will tend to work out better. As you can see in this case, I went all in. I bought 10 on this candle here, but had I only bought one and let it kind of play out for the day, I probably could have layered into this position a little bit better. I could have bought one here. When it broke down, I could have added two, or I could have waited till it broke above here and started adding at these higher positions up here. Whatever the case, obviously I had a bigger picture in mind here, and that's why I did not close when it hit the pivot. If you were doing a day trade, I would say close it, when it bounces back. And a tight stop would be the pivots here, obviously. So you get out at the pivots because it's a good point. A close above the pivot, not just because it hits the pivot. I like to see a close, so I would have closed probably here or on this candle once it's confirmed. I don't close when the candles are still open because you don't want to get squeezed out because it's a fake. So the candle could be going, oh yeah, we're going above the pivot, ha ha ha. Then it quickly reverses and finishes below again, and we got you. We took your money, and only to continue lower. So don't get squeezed down. I like to wait unless I see strong volume. Let's say on this candle here breaks above, and then the volume is significantly higher here, than all the rest. Then I say, okay, it's time to, like this is how the volume has been going. If the volume is significantly higher, then especially if it's higher than the short candles, the bear candles, the red candles, then I say, whoa, it's time to get out, before the pain gets even more aggressive. So yes, that's what I'm looking for there, okay? All right, so let's move on to the next one, which was BLK. So here we're looking at an entry on 10.9, and we got out on 10.10. And these are the lessons here where it's like, damn, if I would only have held that a little bit longer. If only I would have held that a little bit longer, man, the money I could have made. So obviously I bought these around $3,000 and I sold them for $9,000. So that was a pretty good return, guys. I'm like, whoa, look at this money. But you'll see why I got out. The only problem I had was that I didn't get back in. I don't regret my reasoning for getting out, but I should have got back in when I saw that the move continued. And that was the only problem I had here. So obviously here we got in on 10.9 at 3.2, and the puts were the 460s. Inspiring that week, I bought 10. So let's take a look. That was at 10.06. So 30, 40, 50, 10 o'clock candle. So I got in on this candle here. So we had a pop. I was like, okay, we had a longer term vision here that it was going to continue lower. So obviously you don't see a significant pattern here. This was based on the bigger picture. Hey, all the financials are going to start to sell off, which obviously we see here. They did continue to sell off for the day. But, nowadays I am looking for a consistently better pattern. So maybe a possible better entry would have been on the break. Obviously, this one gapped down from the previous day, and it just continued lower. So there is no significant pattern here. You would have had to kind of make a decision whether, if it stays below the 50 MA, I'm getting in. I wanted in, so I took the opportunity to get in after this bounce, and I just went in. But yeah, normally I want to see a better pattern or something. But if I have rhyme or reason to believe that we are going to continue lower, you know what? I had to take it, and I did. And obviously it worked out. So here we go. The next day on 10.10. I got out right near the open, 9:37. So I got out on the first 10-minute candle. And it was obviously on this candle here. Obviously, look at what's happening here. It just consolidates. It consolidates, so I took my profits at the pivots. I mean, I didn't even let it close. So obviously, my target was the pivot. And I'm pretty sure I took it at the pivot. And then look at what happens here. It just started to consolidate. So obviously I was not upset to see my exit. I was like, I was pretty excited when I saw this because I'm like, hey, well, I got out a good time. It's just consolidating here. Who knows what it's going to do from here? But when it closed here, I should have got back in on this candle here. Because, yes, I made 6K on the move. I made 6K. But now, look at this move. This is just interesting. This was the biggest candle, I think, of the week on BLK. And I missed the entire ride. Just because I got out and I missed getting back in. Because, again, guys, what did I have? Too many positions to look at. It's just too much. And when you have too much, you're bound to miss things like this. And obviously, I didn't have an alert set to remind me to, hey, pay attention to this. So I obviously missed out on this opportunity. And I couldn't take advantage of the continued move lower. So that was BLK. I got out here, took my 6K profit, and that was it. All right, so let's move on to BKNG. BKNG, we got in on 10.10 and we got out on 10.10 on this one. So 25 cost, 29. So we made a small profit on this one this day. Just over $400 it looks like. So it was 10.17. Got out just over 20 minutes later. So this one I bought at 10.17, 30, 40, 50, 10, 10, 10 candle here. So I bought it on this candle. We have a break below the pivot. It's continuing lower. So I said, hey, let me take it. I took it, and I just got out 20 minutes later. So it was a quick scalping play. I mean, I didn't stick with it. I should have stuck with it, but I didn't. So so I got in on this candle. Then I got 20, 30, 40. Got out on this candle. No rhyme or reason. Obviously, yes, I was green. Quick scalp play, basically. I would call this, but it's not an ideal situation, at least for my trading style now, to just be getting in and out. Uh, should have had a better plan when it came to this one and just let it ride out like we were expecting them to do. Because you will see, I did get back into this, but had I held this position, obviously at a better pricing, I did the 1800, so obviously I did these out of the money. So as soon as I got at the money or near the money, I got out. But I should have held, because obviously the move is better. But when you plan them out a little bit better, see the bigger picture, see a little bit further ahead. I do tend to do a little bit better on those than these small ones. Obviously, I only made $400 on this one. But overall, now a few months later, what I'm noticing is the ones that I do really good on are the ones that I plan out a little bit better and not just get in and out. Get in and out of all the time. Okay, so that was BKNG, and let's go to Amazon. So this one was a doozy. This one was a busy day. Obviously, look at all this stuff, man. All the positions were started on 10.9. I took a bunch on 10.10. I added more on 10.10 for the next day or two. So this was a busy day for Amazon, and for good reason. I do like trading Amazon. It moves a lot. It is expensive, but it pays well. It pays me really well. So I do Amazon because for the most part, I trade it very well, and it works really good for me. So let's take a look here, and let's see how we did on Amazon. So let's eliminate anything from the knife. So 1872. All right, this was from the knife. Obviously, I covered those already, I believe. I lost money on this one. So 1872s, I bought one, sold one. Lost that, so let's get rid of that. All right, on 10.9, I bought two, 1800. All right, I'll see here. Sold two and 1800 on 10.10. Okay, so this is where we start for the next day. Bought five, 1795. Bought five, 1795. All right, I believe this one was from a 10.8 trade. Let's take a look. I'm just getting rid of the stuff that I've already covered, or that's not relevant to helping me achieve the 10K, guys. Just to keep it simple, because these videos, I don't want to make these too long. I want to make sure we're getting the best value out of these and not just going back and forth between all these days. So at 10.07 I bought two. At 10.08 I bought some more. So obviously you see I'm only buying puts. At 10.53 I sold some of my puts. Sold five. Oh no, wait, this is a spread, guys. I'm sorry. There you go. All right, that's what I was missing. Okay, this is a spread. So I did a spread here, 1795, 1790 puts. So I sold the 1790s and I bought the 1795s. So that's still a position I'm looking to go south. So it looks like I may have been locking in something. So let's analyze these little by little. All right, so 10.9, bought. So everything here was pretty much a buy. So let's just continue here. So all right, let's do the first one. 10.07, I bought two Amazon puts at 1800. So that's way out of the money. Down there. All right, that was at 10.07. 30, 40, 50, 10. 10.07, I bought some out of the money. 10.08, I bought some 1870s. So that was more at the money pretty much here. So it probably might have been how I got filled. And probably the out of the monies got filled first. But whatever the case, I had the order in for both here. So 10.07 I get filled for the out of the monies. 10.08 I get filled for the at the monies, near the money. 10.53, let's see. So 30, 40, 50, 10, 10, 20, 30, 40, 50. 10.53, I went ahead and bought 5 at 17.95. Oh, I did the spread. 17.95, 17.90 puts. Okay. So that's way down there. So I did a spread. So that spread, I'm looking for the market to go lower. So I'm still want it to go lower. So we're Amazon. All right. So on this spread, obviously, it's still it's a debit spread. As you can see here, I pretty much paid about 40 cents for those. So I do want the stock to continue lower. But this is just to basically show the point that you can still trade these bigger guys and take advantage of them and their moves by doing spreads. So obviously this is a $5 wide spread. So it's a, 500 or $5 risk per contract. So it's just something to trade. But if you're not familiar with spreads, I'm not gonna cover them too much here because I'm gonna do a whole series on those and how to pretty much trade these like this. But we'll see the results of this when I close it. So basically 40 cents I paid for those. We'll see how much we got out of those for. All right, and then 10.9, 11.03, and then the next one I put in was at 1300. So I bought those for 28 and 24, guys. Okay. So again at 1103. Let's see. So this is the 1050, 10, 11. So at 11 candle here, on this one right here, is when we added more, and then we added some more at 1300, which was in the afternoon. So 10, 20, 30, 40, 50, 12, 10, 20, 30, 40, 50, 1. Okay. And at 1301 right here. So probably when I started breaking below that pivot again, I started adding some more. And like I always say with these pivots, consolidation, 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 or it will bounce back. It always, so that's why I like having these pivots up, because it's a good indicator for me of what may or may not happen next, or what may happen next, which is usually a bounce or consolidation. So I use them as targets for taking profits now, because as you can see here, it's like almost inevitable, man. It's just these stocks, these indices, they love these pivots. So that was that. Okay, so that was the 9th. Let's go into the 10th. On the 10th, I started taking profits at 9:32, right at the open. I went ahead and I started taking profits on some of these. So at 9:32, I went ahead and sold. Let's see, which ones did I sell? I sold the 1865 puts at $30. 1865. I bought those here at 1301 for $24.85. Okay. And I sold those at $30, so a $6 gain on those. I sold the 1870s at 35. 1870s right here, $27. Sold them at 35. So I started taking some profits here. Nothing wrong with taking profits. At 936, I sold the 1800s at 955. So I didn't take much profit on these right here. Only 55 cents. But that's what happens when they're out of the money. I want to get out of those as soon as possible because they are the most at risk. And if the gap down wasn't as severe as I was expecting, it's just not worth the risk. So you want to get out of those first. I want to get out of those first, so I did. And obviously I got back into some positions here, but you'll see more of that. But that is one common trend that I like to do now, which is get out of the monies as soon as possible. Day trade those if you must day trade, because those are the ones that are going to hurt you the most when you're doing these trades. Okay. 1885s I sold at 941 for $46. 1885s I bought. When did I buy those? Let's see. 1885s at $28 here. So we bought those at $28. I sold them at $46. So that was a decent gain right there. That was a pretty good one, right? There you go. $28 to $46. So what is that? Almost $20, $18 gain on the option contract. So that was a pretty decent gain right there. And then from then on, looks like I bought some more 1800 puts at 13, scalped it, got out 1360. So bought some more 1800s at 1605, sold them at 22. So obviously the stock is now is selling off hard. So I started taking advantage of that, and taking advantage of the momentum. So I did not give up on that opportunity to start making money as things start to sell off. But obviously, as you can see here, had I just held these 13s, I would have been a lot better, right? Because now I don't have to keep getting in and out, in and out, in and out. And that's what I want to make sure you guys understand. You don't have to keep getting in and out right away. Don't get shook out. And this is where I was at the time. And again, yes, it was a good day. But now it's one of those things where it's like, Ron, stop making rash decisions. Stop making impulse trades. Stop getting in and out, because you would have been better had you held this a little bit longer. Because look, 1800s. Look at all these trades here. All of these are 1800 trades. Had I just held this 1300 or kept adding to it instead of getting in and out. So if I would have bought one here again, bought one here again, right? Bought one here again. See what's happening here? It just keeps going up. And then I started selling here at $29.95. So had I kept those $13 ones, I could have sold them at 29. Had I just kept those $16 ones, I could have sold them at 29 instead of 22. And that's what I'm trying to get at. You don't have to keep getting in and out, in and out, in and out, in and out. Because this is the result of that. It just doesn't make sense to keep doing that. So obviously, this is the 10th here. And obviously the stock just pretty much sold off for the day. And I'm not gonna go through each candle, because obviously you guys can see that it was a good day on Amazon. It just kept selling off, and I kept doing these 1800s, because now the stock is pretty much at 1800s. So I did stay closer, but still out of the money, and I kept making money. But had I held it, and look at where it finished through the day. Had I held those 1800s that I bought earlier in the morning, boy, look at this. That's from 1800, it dropped another 40 plus dollars, almost $50. And that's what I'm trying to get at. The in and outs, in and outs, in and outs. Yeah, they work great. But until they don't. And that's what I'm trying to get at. When you have a better plan, when you say, you know what, I'm going to get in here, and then I'm going to set a stop at a specific location, let's say the pivot, that's going to be my stop, and then my take profit is going to be down here somewhere, and you're just like, okay, you know what, you have, you look at the daily, obviously, where you see resistance and support, and you're like, you know what, my target is going to be down here somewhere. Or I'm going to take my first profit, as I showed in the recent video, where I started taking profits on the way down. Well, let me take one here. Let me take another two here. That's a better plan than just getting in here and then getting out here. Getting in here and then getting out here. Getting in here and getting out here. At least for me. That's what I noticed. It's all in and out, in and out, in and out, guys. It just doesn't work too well long term for me. I'm not saying that it doesn't work for other people, that it might not work for you. But for me, it works better when I have a bigger picture in mind and I kind of plan my trades out first. So when I plan them out a little bit better, I'm like, okay, this is what I'm going to do. If it does this, I'm going to lock in profits, and I'm going to move my stop, or I'm going to move my stop based on the last 30-minute high. So if we break above this line here, all right, I'm going to start locking in or closing out my positions, etc. And that's what I've noticed works best for me, and that's what I'm trying to share here with you guys. Hopefully you guys are learning something, but like I said, that's the changes. So that was October the 10th. As I said before, it was a nice day. Obviously, we made some decent money this day. 11,000 obviously is nothing to laugh about. So it was a really, really good day. I'm not going to lie. But as you can see here, there's a lot of things I would do differently now, that I do differently now than I did this day. Just because, one, too much. This is way too much stuff, guys. There's no need to trade like this anymore. There's no need to have that many positions open when you're trading, because it becomes really, really hard to manage when things start to go against you really bad, because the market's decided to rally on some news or whatever. So that's just what I wanted to point out, guys. It's just, this is a no-go situation here. Do not trade like this. This is way too much. Way too much. Way too much. And obviously you trade according to your account size too. But, obviously as my account kept growing, I kept getting a little bit more aggressive. And obviously I paid the price for that. And I'll show that in the upcoming videos when I lost $198,000. I mean, that's one of my favorite videos. I mean, $198,000 loss, guys. $198,000 loss. It's amazing. I was real cocky. real greedy. I felt unstoppable, But it was why do I celebrate my losses? I celebrate that because you know what? The fact that I can tell you that I lost $198,000. I mean, that's a loss of $198,000 in a matter of basically a day or two. It's amazing. You know why? Because that means something has changed in my life. I mean, for me to tell you I lost $198,000 just 7 months ago, basically, I would have told you what. But the fact that I was able to say that to me, it says, well, something's obviously different because now I had $198,000 to lose. You know, but you know why I wasn't upset? Because I had already paid myself. Paid myself nearly 125K in the last month and a half, basically. So it's like, you know what, whatever. I lost 198, but I already locked into my checkings, and paid off a ton of debt, paid off, a lot. I changed my life already. So to me, it was like, you know what, whatever. As long as you're paying yourself, and my rule is pay yourself 20% at least every week. My pay days are Fridays, so payday Fridays, right? Fridays. And you know my sloppy handwriting here, guys. But whatever, I like to pay myself on Fridays. Just make sure you're paying yourself. If you make money, pay yourself. Make money, pay yourself. And I had one recent conversation with a great guy. He's getting into trade. He likes to trade, and he's doing it from his small account. He has a small account. Every time his account goes over 2,000, he pays himself anything above that. And he keeps paying himself. And if you're getting into the habit when you have a small account, forget it. When you have a big account, it's just gonna get better and better. And that's what you gotta kind of pay attention to. Always pay yourself. Anyways, guys, this is October the 10th. This is the final part of October the 10th. Tomorrow or in the next video, episode 8, we're going to start going into October the 11th. It was a $19,000 day. It was a 19K day. So that one is an exciting day as well. Pretty busy day as well. And then Friday was the doozy. Where we finished out at 66K for the day with just basically two stocks and a filler. I think it was just Amazon BKNG, and I think I had maybe one extra trade in there that I might have carried over. But anyway, guys, thanks for watching. I'll see you guys next time. Hope you enjoyed. Hope you learned something. If you did, give us a thumbs up, and don't forget to subscribe. See you guys next time.